here is just the monthly budget. This is where you're going to plug in all of the assumptions. So that means we take what's happened in the past. So let me backtrack just a little bit. Ideally, you would pull up this template and then you would have your own reports also in front of you so that you can see what's actually happened in the past, what the past month, past 2 months, past 6 months, whatever information you have. You would look at what's actually happened. Think about what you know about what's about to happen. Maybe you're going to launch a new product or a new line of sales, or you're in a period of growth and you have like goals that you're trying to hit every month. You're going to take both of those things and plug it into a budget. This second tab here is budget versus actuals. So the monthly budget, you would just, this right here, you would sit down and ideally do one time and then update it as needed. This budget versus actuals is the same thing, except you've got your budgeted amount that's going to show up here. You would plug in what actually happened that month from your financials, like from your profit and loss statement. That's what we're basing the budget on, is your profit and loss or income statement. You would plug in what actually happened, and then this will calculate what the difference was. And it'll do that for each month of the year. And then it's just a really long report, but then you'll see kind of the totals as you go. So let's look at just the monthly budget. So budgeting can be overwhelming because it's all an estimation, and sometimes people are like, I don't even know like how to guess what I'm going to do. Like, it's really hard sometimes to assume. So I always encourage people to just start with what you're currently doing, and then go back in and plug in what you think is going to happen. So we're going to pretend it's December and we're looking at January. That way, for the sake of ease, we'll start at the beginning of the year. So if you know that right now you have these are 3 different revenue streams. So say your first revenue stream is like one-on-one services. And then we'll say this is an ebook. And then maybe you're going to do a boot camp. So if you know right now that you're doing, let's say $4,000 a month in your one-on-one services, and then you have an ebook. And so right now we'll say maybe it's doing $200 a month. You're selling your ebook, and your boot camp is like a one-time thing. So that's $0 for most months. So then you want to look down at your cost of goods. And again, you would just be plugging in what's actually happening. So I'm just going to plug in some fake numbers. Okay, so say we think that your labor is $500 and materials, since most of it is online, we'll say is like $200. Just going to plug in some fake numbers so that we have something to work with. Something almost everybody has, dues and subscriptions. Okay, and then say we don't budget anything for repairs and maintenance. So say this is what you're doing right now, and at the end of the month, you have $2,000 to work with. Now, your plan is to grow, you've got these different goals, so we wanna figure out what's gonna happen throughout the rest of the year. What I would generally do is copy this through the entire year and then go back in and make changes as I think things are gonna change. So maybe you know that you're gonna launch a boot camp in the month of March, and then you know you're trying to grow your ebook sales. So we want to say we're hoping that we're going to get to 500 a month in ebook sales. And I would copy this across. Okay, so then we say maybe our goal is to add another one-on-one service. So that'll put us at, say, $5,000 a month. And then if all of these stayed the same, Okay. There we go. Okay, so basically this filled out the budget based on what's happening right now and what we think is going to happen like in the next 2 months. That's all we've really planned for so far. And that's assuming all expenses are going to stay the same. That means that you're going to make, oh, why this little thing was here. Go away. Okay, I don't know what that little guy is. Oops.
And give you copy paste a blank cell, just like anywhere. Yeah.
Yeah.
Make it go away or something.
Okay, he went here. It went away. I don't know why I couldn't get it to go away. But okay, so if this is what we were planning for, then at the end of the year you would have profited 39,000. You would have done $65,000 in revenue. Now this is where you really think about what your goals are for the business, and it's where you get to kind of backtrack from what your goals are, and then think about what expenses are going to be needed in order to reach those goals. Maybe in order to double this and get to $130,000 a year, you're going to need to hire on somebody, or hire a VA, or hire or contract out some more work, or take on a new subscription service that's going to really like make one of your workflows more efficient. That's where you're going to go in and plug more in here, increase your expenses, add those things in, and be able to make sure that you're not going negative in a month. What is also really important here is to think about if there's going to be any kind of seasonality or like hotspot months where things drop or they increase. It's also going to help you. Okay, so like say if for some reason in August you know that I don't know why this would happen, but your one-on-one services were going to drop down to 1,000, but they were going to go back up to 5,000 in September. Well, you can see here that this made your net income drop negative, meaning for that month, you're going to have to spend more than you're going to bring in. Knowing that this is going to happen in August, or that you're assuming it's going to happen in August, when July hits, you're going to leave a little extra money in the bank because you're going to need that for the month of August whenever things run negative. Or maybe you come in here and say, okay, I'm not going to pay rent this month. You can't do that. But maybe you say, okay, I'm going to drop down my advertising just for this month. I'm going to drop it down and then I'm going to pop it back up in September, because that's going to give me a little bit more room to breathe than it would if I was still having all my expenses at full force and I knew sales were going to drop. Now, on the flip side of that, like we talked about, if you are expecting a big increase, maybe you're going to launch a boot camp again and it's going to be $20,000. Again, you might have to add some things in here to really support that, the ability to have something big like that hit your revenue stream, and you want to be able to be prepared for those things. So really a budget gives you the ability to see what's going to happen in the future based on what your assumptions are, and make changes before that period kind of happens. Do you guys have questions?
Yeah. Okay, so like I'm gonna have a huge increase this month because I just signed a client, and the initial cost for the website plus their initial retainer. It's actually very exciting because thanks. No, their retainer is actually gonna 100% cover my living expenses, and this is like, so that's everything huge. Else is just extra at this point. So I'm like screaming. I'm so excited. But anyways, I kind of get to this place where I like look at my bank accounts and I'm like, there's a lot of money in there. And then I'm like, I feel like I just kind of lose it. You know what I'm saying? Not the money, but I'm just kind of like, and so I guess my question is, we're already like towards the end of the year. Do you recommend budgeting like in quarters at this point? Like, should I be planning for Q4 to just kind of finish the year strong?
So what I do personally is I actually have a third tab, and it's just a one line, like it's just one, it doesn't have a month, it just has one section, and it's what my typical monthly expenses are, like what is just pretty average, or what's things that are non-negotiable, like my dues and subscriptions and those kind of things. Yeah. That way I know, okay, my base expenses are this amount. That's outside of my living expenses. That's like what I have to spend in order for my business to run. and I know what that amount is. So if you know that you have $10,000 coming in, you need $3,000 to live on, that gives you 7,000. Then you say, okay, well, I know it's going to cost me 1,500 or 2,000 as my business expenses. Then you'll really know how much money you have to play with in your account.
Yeah. Okay.
Then to kind of answer your question, once you do that, it's really easy to just say, okay, well, if things were the same for the next 3 months, you could build out that budget for the next 3 months without it being too much work, and then add on starting next year.
Yeah. Okay. And I guess like you could kind of look at this too as sales goals, right? So if we're looking at like, because for me, I don't know about you, Meredith, like some of my contracts are 3 months, some are 6 months, some are a year, some are month to month, and I could be SOL, just based on the size of the company. And so it's like, then it comes down to sales goals. And this is when I had an employee and we had sales goals, and like that was just so stressful to me. So that's why I'm trying to build residual. But yeah, so it's like, I guess this could also be treated as, all right, here's your sales goals if you want your bottom line to stay the same.
That's exactly right. And you could even break it down further. I don't want to make it too complicated. You can keep it just like this and just have a top line revenue. But if your business operates on a small-ish number of clients, you could even say client 1, client 2, client 3. Okay, they're going to pay me $4,000 a month for 6 months. So I'm going to put that in there. And then it's going to be 0. And then client 2 is going to pay me $1,000 a month for a year. And then client 3 is only paying me 1 month, but it's $5,000, and then it's 0 for the rest of the year. And you can break it down by client. You don't want to overwhelm yourself, I guess. So you don't want to go into so much detail that you're going to spend like hours trying to build this out. But if that would help you be able to see, oh, like in September, 2 of my clients are going to drop off, and then I'm only going to have that $1,000 a month client. So I need to make sure that I have a certain amount saved up in my account to kind of get through that time until I add another client to the mix.
Okay.
Does that make sense?
Yeah. Oh yeah, absolutely.
Yeah. Sometimes it's helpful to really break it out so that you can see when clients are going to fall off, when they're going to add back, or maybe you even have one that's like 6-month clients, 3-month clients, 1-year clients, and you can kind of add those in and see when those are going to drop off. You can add people in different buckets.
Okay.
Doing that will make it a little bit different when you're comparing it to actuals, but what you'll do when you're comparing it to actuals is just look at the total income number and say, okay, I was thinking 4,000 was going to come in this month. I'm not worried about how I broke it down, but only 3,000 came in this month. I was off. I forgot that this client's contract's ending early, whatever. Then you can like kind of make evaluations based on what happened.
So like, can I dig into that for just a sec?
Yeah,
So
absolutely.
I have kind of like a similar setup situation to Lauren's as far as like what I offer. So I've simplified to having like a 3-month offering and then like intensives. And then there's like kind of this sometimes middle ground, but I'm inclined, like reading this and talking through it, it sounds like I would want to be like, okay, here's my one-on-ones is what I call them. So here's my one-on-ones, and then here's my intensive. So I could say like, oh, if I'm expecting to make, I don't know, have 3 one-on-one clients, like this is how much it would actually be month to month. And that would also tell me like, so you're falling short. Like this is a month you gotta hustle and find yourself some more one-on-ones, or like bump up your intensives because
I was gonna say,
you're not hitting the numbers.
Yeah.
The sales. Okay.
Yeah, you could say, okay, so I'm gonna budget for 4 intensives. And then when you look at it, you're like, oh shit, I'm gonna run short. I need to find another intensive client for that month because that's gonna help push me into a better position.
So you'll see all of my specials for intensives.
I will be like sharing those things.
Yes.
I'll be like, book her intensive. Yes. So really the budget can absolutely work for sales goals. And what you want to do is make sure that you're increasing your expenses to match that sales growth. So that the budget actually works and it's going to be closer to actuals. Something that there's a guy named Mike Michalowicz, there's a book called Profit First. It's a good book. You guys know who Dave Ramsey is? Mm-hmm. He's a little, Mike Michalowicz is a little extreme like Dave Ramsey when it comes to money, but he talks about like business money and profit. But he talks about this one thing, and I use this a lot to think about it a lot. The money in your bank account is like a tube of toothpaste, And when you have a lot of money in your account, or when you sign a new client and you get that big check in your account, you're like, yes, there's so much money. I'm gonna like go spend. I can like sign this, like I can hire somebody, or I can like bring on this like fancy new software that I've been wanting to use. And then I'm gonna like buy a new desk, and then I'm gonna like go do all these things. I'm gonna go eat like an expensive meal and buy a bottle of champagne to celebrate. Like we get really excited.
God, this is me.
And then you're like, you're like squeezing out that toothpaste because it's full. So you're like, you don't care how much toothpaste you use on each, like, you know, each brush. But then when you don't have very much toothpaste left in that tube, you're like squeezing out every inch. Like it's amazing how far you can make a small amount of toothpaste last. And when we don't have a lot of money in our bank account, it's amazing how far we can make like $100 go or $1,000 go. Like we really can like make that last. Whereas when we have a lot of money, it just like goes so much faster. We spend a lot more. So budgeting will help you see, okay, that was a big check that hit my account, but actually I need a lot of that because I've got to spend money on this, this, and this. My time is going to be taken up. So I'm not going to be able to take another client this month because I'm onboarding this big one, which is going to take more time than it will in the next 5 months or whatever that looks like. So budgeting will help you spend in the right places. It also will give you confidence of like, if you want to go out to dinner and buy a bottle of champagne and celebrate, you'll say, okay, here's this month right here. Here's my business meals. I'm going to go out and we're just going to like have a great dinner. Got out of the plus in the wrong place. I promise I know how to use Excel. So we're going to go out and have a great dinner and we're still going to be okay. Like we're still going to be at a profit. Things are going to, you can go and spend that money knowing that you've planned for it and that it's not, you're not going to like get to next month and all of a sudden your cash is going to run short.
I have a tax question then.